It really does feel like we are watching a huge financial shift happen right in front of us.
Oh, it is.
You know, you've got this like bedrock of traditional banking,
Mm,
and suddenly it's facing this tidal wave of, digital assets, Bitcoin, stablecoins, all this stuff.
right.
I mean, it's kind of overwhelming, to be honest, trying to wrap your head around all of it.
Yeah, it really is. And it's a pivotal moment for sure.
Right.
For this deep dive, we've got some incredible excerpts, actually,
Yeah.
that look right at the heart of this whole transformation.
Yeah.
How is this all going to play out?
Right.
The regulatory battles, the tech shifts, like where is finance even going?
Right.
So our goal today really is to help you understand like the core forces that are at play,
Okay.
particularly the interplay between our quote unquote normal financial systems
Hmm.
and the rise of digital assets.
Yeah. Okay, so let's get right into it.
Okay.
Let's actually start by looking at like the foundation.
Okay.
The very foundation of the financial system that we're talking about. And our sources really highlight something that might be kind of an eye-opener for a lot of people.
Yeah.
It's this inherent leverage built into traditional banking with fractional reserve.
Right.
I mean, we all kind of know that banks don't like keep all of our money just like sitting in a vault, right?
Right.
But the actual ratios are kind of wild when you think about it.
Yeah.
Like, for big banks, it's often something like 12 cents
Wow.
in reserve for every dollar deposited.
Yeah.
And for smaller banks, even less, like 8 cents.
Oh, wow.
I mean, think about that. Every
Absolutely.
time you see another headline about, bank stability or whatever,
Yeah.
just remember that, like, the whole thing's resting on this tiny sliver of actual cash.
Yeah. I mean, and what's really fascinating is how digital assets now kind of come into the picture, right?
Right.
Because they amplify that risk even more.
Right.
Like, think about it. Traditionally, withdrawing funds was kind of a slow process.
Right.
But with stablecoins, those draws can happen like that
Yeah.
instantaneously.
Right.
So connect that speed to a fractional reserve system.
Yeah.
And you can just imagine the potential for incredibly swift bank runs.
Right.
The source material actually even says that if banks were to issue stablecoins under the current model,
Mm-hmm.
the scale of a potential run could be way bigger than what we saw with Silicon Valley Bank.
It's almost like, the speed of the digital age is kind of like this sudden gust of wind hitting this, this wall that doesn't have a lot of support. It's kind of scary when you think about it.
Yeah.
Okay, so against that backdrop, we've got these new players trying to navigate this whole landscape.
Mm-hmm.
And one that really stands out is Custodia Bank.
Yeah.
The story is kind of like this, David versus Goliath battle.
Absolutely.
They're trying to carve out this regulated space for crypto.
Right.
What did you think when you read about them?
It was a really interesting story because it kind of highlights that tension, between the old and the new. What's really interesting about them is they're trying to solve this like debanking problem
Right.
that a lot of people in crypto have faced,
Right.
basically getting shut out by traditional banks.
Yeah.
The source details, like their whole journey, it took 7 years.
Wow.
And it started with this really groundbreaking work in Wyoming.
Right. Wyoming, they were ahead of the curve with all this.
Absolutely.
Like, they were one of the first to define digital assets as property, right?
Yes.
And they really set the stage for that commercial law framework.
Hmm.
And it's remarkable how many states, like half of the U.S. states now have followed suit.
I know, it's incredible.
Yeah.
So Wyoming created this thing called an SPDI. It's a
Mhm.
special purpose depository institution.
Right?
And it's basically a bank that's designed for digital assets.
Right.
And Custodia was trying to operate under that framework.
Okay.
And initially, there was some level of cooperation with the Federal Reserve,
Okay.
but it totally stalled out.
Really?
And they faced major pushback from the Federal Reserve and the whole banking system.
Wow.
Caitlin Long, the CEO, she said, quote, "They tried to kill us multiple times," end quote.
Wow. That is intense.
It really is.
Yeah, I mean, from those initial steps in Wyoming to actually launching Custodia, it sounds like a real uphill battle.
It was.
And then FTX happened.
Right.
Like, talk about throwing a wrench into everything.
Oh, absolutely. The FTX collapse really shook up the whole regulatory landscape.
Yeah.
The source points out how Caitlin Long, she was really outspoken against Sam Bankman-Fried,
Right.
and she's totally opposed to a pardon.
Right.
So that whole event definitely made things harder for digital assets.
Yeah, for sure.
And probably for Custodia, too.
Yeah. So we've got this potentially shaky traditional banking system, right?
Right.
And this like pushback against crypto innovation.
Mm.
And then we land in the world of stablecoin regulation.
Yeah.
I mean, our source describes the current situation as a, quote, scrum, end quote.
That's a good way to put it.
I think that's pretty accurate. It's like everybody's just like, fighting for their position.
Yeah. You've got all these powerful players with wholly different agendas.
Okay, well, break it down for me. Who are the main players here?
All right, so you've got the big banks.
Okay.
They clearly want to dominate the stablecoin market.
Right.
Then you've got the existing stablecoin issuers like Circle.
Okay.
They're obviously trying to protect what they've already built.
Right.
And then you've got this major global player like Tether.
Right.
Operating on this massive scale, but mostly outside U.S. regulation.
So you've got the big banks, you've got the existing stablecoin issuers, and then kind of like this
rogue player.
Right, exactly.
Yeah.
I mean, can you imagine the lobbying happening in D.C. right now?
Oh, it's insane.
It's crazy.
Both the banking sector and the crypto industry are spending tons of money trying to influence this legislation.
So what's likely to be in this upcoming legislation?
Well, it's still being debated, but the source points to a few key elements. One big one is this requirement for stablecoins to be backed by dollar-for-dollar liquid reserves.
Okay, so that makes sense, right?
Yeah.
Like making sure each stablecoin actually has real dollars behind it.
Exactly, ensuring stability.
Right.
Another potential provision is this idea of requiring banks to run their stablecoin activities through like a separate subsidiary,
Okay.
a ring-fenced bankruptcy, remote subsidiary.
Okay.
And the implication there is that maybe these stablecoins wouldn't need FDIC insurance,
Interesting.
which is really different from what the Biden administration initially proposed.
Right.
They wanted to limit stablecoin issuance only to FDIC-insured banks.
You're right.
And people like Caitlin Long, they saw that as anti-innovation.
So it's this constant push and pull
Yeah.
between wanting stability and wanting to allow for innovation.
It's tough.
Yeah. Okay, so we've got potentially shaky traditional banking, this big regulatory fight over stable coins. And now I want to talk about something that I thought was super interesting.
Okay.
It's this connection between Bitcoin and stable coins.
Yes.
It's not something that most people would think about right away.
Right, it's easy to see them as separate, but they're not.
Yeah.
The source makes it clear they have this like symbiotic relationship.
Right.
Like the vast majority of Bitcoin trading volume, it's not settled in dollars or euros or anything like that.
Yeah.
It's done using stable coins.
Wow.
And Tether's the big player there.
So the stablecoin framework really impacts the whole Bitcoin ecosystem.
Absolutely.
It's all interconnected.
It is.
Wow. Okay, so we've got this potentially fragile traditional system, this regulatory battleground for stablecoins,
Right.
this crucial link between Bitcoin and stablecoins.
Mm-hmm.
Now, let's look ahead.
Okay.
The source material gets really fascinating when it talks about layer 2 solutions
Yeah.
and this potential digital dollar wars.
Like, this is where things get really interesting.
Yeah,
It's like we're getting a glimpse into the future of payments.
right.
So the source highlights this announcement from Tether.
Okay.
They're developing stablecoins on Bitcoin's Lightning Network. Okay.
They call it potentially the, quote, announcement of the year, end quote.
Wow.
And when you think about what that means for speed and scalability,
Mhm.
it kind of makes sense.
Okay, so explain that a little more.
Sure. So base layer blockchains, like Bitcoin's main network,
Mm-hmm.
they had these limitations,
Mm-hmm.
right?
Yep.
They can't handle a ton of transactions super quickly because of how they're designed.
Okay.
But layer 2 solutions like Lightning, they operate on top of that base layer,
Okay.
and they allow for super fast and scalable payments.
So it's like bypassing the limitations of the original blockchain.
Exactly.
Okay.
And for future applications, like think machine-to-machine transactions,
Right.
which need to happen in milliseconds,
Right.
layer 2 is essential.
So it's about moving beyond the initial limitations to make this technology actually work in the real world.
Exactly.
Wow. Okay.
And the source even says that most U.S. dollar payment volume could eventually be on layer 2.
Really?
Yeah, and that sets the stage for what they call a, quote, fascinating land grab, end quote,
A land grab
for dominance in the digital dollar space.
Oh, wow.
So you've got banks like J.P. Morgan, Bank of America, they might issue stablecoins.
Okay.
You've got the existing players,
Right.
and then you've got innovators like Custodia with their Aavit token.
Right.
It's going to be intense.
Yeah, that's a lot of competition.
It is.
Okay, so let's shift gears a bit and talk about U.S. government.
Yeah.
What role are they going to play in all this?
Well, the source dives into some really interesting perspectives there,
Okay.
especially when it comes to central bank digital currencies or CBDCs.
Okay.
So they suggest that a potential Trump administration would likely oppose a CBDC.
Really?
Yeah, they'd be more likely to support private sector stablecoin innovation, but with regulation, of course.
Okay, so a more hands-off approach, but with some ground rules.
Exactly.
So what about the U.S. holding Bitcoin as a strategic reserve?
Ah, that's a good one.
I mean, that's a wild idea when you think about it.
Like
Like the
that.
U.S. government holding Bitcoin.
Right. Well, the source says that the chances of them actually buying Bitcoin for a reserve are pretty low,
Okay.
like 40%.
Okay.
But what they say is almost certain
What's that?
is that the Bitcoin they've already confiscated
Yeah,
will effectively become a strategic reserve.
just by not selling it.
Exactly.
So it's more of a passive accumulation than an active strategy.
Right.
Yeah, interesting.
Yeah, and when it comes to Bitcoin mining,
Okay.
the source says that government-led mining doesn't seem to be a focus for Trump.
Okay.
He's more about supporting private sector energy development.
Okay.
So things like portable nuclear reactors,
Oh.
streamlining regulations for energy producers,
Okay.
which could indirectly benefit Bitcoin miners too.
So to sum it all up, what are the big takeaways from all of this?
Well, I think the main takeaway is that finance is transforming right in front of us.
Right.
Traditional finance is colliding with digital assets.
Yeah.
And we need to understand the implications.
That's
Like the fractional reserve system, it's vulnerable to these rapid digital withdrawals.
right.
And the stablecoin regulatory landscape, it's this huge battleground
Yeah.
between innovation and control, and Bitcoin and stablecoins. They're deeply connected.
Yeah.
The whole digital asset ecosystem relies on a well-functioning stablecoin framework.
Right.
And layer 2 solutions like Lightning,
Mm-hmm.
they're pointing to a future of super fast payments.
Right.
It's going to be this massive competition for dominance in the digital dollar space.
Yeah, and the U.S. government's role in all this is still evolving,
It is.
but it seems like they're leaning towards private sector innovation over a central bank digital currency.
Right.
So for someone listening to this, what's the one thing they should really take away from all of this?
I think it's this, how do these shifts change how you think about money and value?
Mm-hmm.
Like the whole concept of banking transactions currency, it's all being redefined.
Right.
So you need to think about what that means for you, for your
Yeah.
financial literacy, for your future decisions.
Right.
Like what happens if digital dollars running on Bitcoin become the norm?
Yeah.
How will that impact your savings, your investments, your everyday life?
It's a whole new world,
It is.
and we're all just trying to figure it out.
That's the truth.
Yeah. Well, this has been a fascinating deep dive. I really appreciate you breaking all of this down for us.
You're welcome. It's been a pleasure.
Absolutely. Until next time.
See you then.